All right. What is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is February 17th, 2025, year of our Lord. And it's President's Day. So I guess if you celebrate President's Day, I don't really know anybody that does. But the banks were closed. So the markets were moving at a snail's pace today, right? And we didn't really get much movement. Unless you were trading commodities. I traded commodities and they did me really, really, really nicely. But in regards to the indices, we got pretty much what we expected. Just, one directional, not really a lot of volatility, very, very slow. But I still wanted to get out here and do a market review because nevertheless, the plan should work no matter what the conditions are, right? So what were the conditions? We were range bound. We were bullish above 45,233, bearish below 45,233, bullish above 43,962. Same plan we have had for a week. We are still in range. However, the bulls appear very, very weak, and they still do to me. And they finally have traded up to start the week. This is a good sign that the bears may want to place the high of the week, indicating selling is around the corner. We shall see is what I left you guys with. Cliffhanger. You know what I mean? I could have been a book writer. But if we go look at the range, right? Our range was the low at 44,653 through 44,588. That was London's low. It was PM session low, and it held to be New York session's low because we never came back down there, right? We came close to it, but the low was put in London, and that ended up holding to be true. Where did we go from the high? We went to 44,807 through 44,723. High of the day was 44,759. Again, the range was only about, I don't know, maybe 100 points or something like that. Nothing that I wanted to trade, so I didn't trade the indices. Like I said, I traded gold, and that was in the overnight section. Our extreme levels we were looking for, 4-hour resistance, daily supply, 4-hour support, in-wall below, and daily demand. None of those in which got hit, so they really didn't play a part into price action today. There was only, out of the three indices, the NASDAQ was the only one that was even worth trading, and that's a big maybe because I think that one might have ran for 100 points. I'm not sure. We'll go over it in a second, but ultimately the plan worked, and we can go down to the smaller time frames, turn on the macro time, and take a look at how price is being delivered inside of these macros. Something we talked about today inside of the Discord, we were talking about, hey, you can always follow how price comes into the macro, but you need to understand what you should be looking for in regards to a directional pool. Multiple ways you can get that. The first way, you can look on the daily, the weekly, see where the market ultimately is trying to go. We could see that on the daily, we were ultimately bullish on most of the instruments. We're bullish on all of them. It's just where certain ones were, right? When we start the day on the Dow Jones, if your day starts at 9:29:30, mine doesn't. Mine starts back here at 3:50. But if you start the day at 3:50, you're looking for longs. But if you start the day at 9:30, you're most likely, if you're trying to trade 9:30, you're looking for shorts because you want to see the market trade down to go higher. You're ultimately more bullish than bearish, but if the market's in premium, you look to short it. You don't short it, you don't long it until it gets back into discount. You can do whatever you want. I'm just telling you from my perspective, this is how I view the market, right? Anyway, we trade up into down into 930, trade back up into 950, and then lower into 1025, and then finally we found a bottom. Reason why I love this instrument is because it does what it's supposed to do, right? Midnight was at the low, perfect, because I'm trying to get long. London was at the low, perfect, because I'm trying to get long. We swept London low, we swept midnight inside of 1050 with a left shoulder being placed, and we immediately found buyers down here. This is textbook. If I was trading the Dow Jones today, this was a textbook buying opportunity, right? Because it hits all of my criteria, everything, and it's on top of that, it's lined directly up with time, right? Right there, no hesitation, no fear, full confidence, full pool. I'm looking for longs off 667, and I'm targeting 745, right? Get froggy, maybe you could go to 760, but who wants to sit through a pullback on a half day? Give me this level right here, right? Or right underneath it, right? A lot of people say they struggle with holding to TP. Pull your TP. Instead of going for the stop where the stops are at, the market does the same shit. It gets close to the stop and it fears right? It knows that people are up here getting long, expecting us to run that high, so it dumps right before it takes it. So if you don't want to sit through this pullback, I just suggest that you go to underneath where the stops are, because you know the market's going to hit that every time. This is where sometimes I find myself putting my TP, because I know the market's going to hit this. And quite frankly, I hate being uncomfortable to the point where it's like I'm up so much in the trade, I don't even want the market to get an opportunity to take majority of that back. So I'm either cutting contracts or I'm getting out before the stops are ran, because there's no real benefit, in my opinion, for holding this for another 20 points when I could just get all of my money out right here and most likely hit TP a lot faster. Okay. All right. So 1125 we'll skip, but 1150 trade down into 1150 again, not even breaking the structural low. Another no-brainer long. I mean, a no-brainer long opportunity. It's a scalp though, because we're above midnight, right? But there's no way I'm shorting this. So if I was going to do anything, it would just be a scalp straight back to the upside. Ultimately, all we did was go from PM session low over here at 350 to PM session high by 1 o'clock or 12:30, right? That's all the market was doing all day long inside of the Dow Jones. Let's move over to the S&P 500, where things were just a little bit different, right? But kind of the same. And I'll tell you what I mean by that. Meaning the S&P 500 has been stuck in this little range since Friday, right? It looks like it wants to break out to the upside because you can just look and see what we're doing at the lows. Every time we come to the lows, we find buyers. Higher lows, higher lows, higher lows, higher lows, higher lows, and so on and so forth, right? Oh my God, they already canceled school. Oh boy. Yep. All right. I just got an email from my family. I mean, from the school. My kids are gonna be home again, and now I'm getting a phone call, probably from the school. All right, great. 8 inches of snow coming here tomorrow, so yippee. Anyway, we're putting in lower lows, and higher highs, right? Therefore, the market is headed up. That's it. I guess it's the end of story. Now, is that the end all be all for your trade strategy though, right? No, it's not, because I short and long the market. I had a little bit of a hissy fit, I would call it, right? Last week, where I said I'm only looking to long the market from now on. And the reality is that's just not necessary. That's just me being fearful of holding shorts, right? I'm afraid that it's going to stop me out. I'm afraid that it's going to come back against me. They never work out. That's bullshit. They don't work out because I'm looking for a target that's just not feasible, right? They work out perfectly. This is just a matter of, okay, are you going to do what the market is telling you to do if you want to short? I.e., if the second we break these lows, a swing low, you probably should be thinking about covering. And that's exactly what I did when I paper traded. I was in 2 minis. I covered as soon as we broke these lows, right? I covered one and I just held the other one to break even or something. Like maybe I was risking like a point or something. But point being is I played the short the right way. Until further notice, shorting the market is simply scalps, right? They're simply scalps to go higher, right? Until further notice. I think that there's a possibility that we reverse this week, or at least start to come down a little bit this week. But that's neither here nor there until we see confirmation, right? If we're looking at the S&P 500, when you look up at the 5-minute, right? And Yoga and I were having this conversation this morning, right? Like, we just take everything off and just remember the fact that we're in supply, okay? Ultimately, when you wake up in the morning and you look down at 4 a.m., you should be focusing on what London did, because Tokyo and Sydney are going to set the range for London. London is going to set the range for New York, and PM session is going to set the range for all of that shit, right? So if that's the case, well, you trade New York session, so you probably want to know what the range is from the previous session. Previous session was London, right, at the low, and then midnight was the high point. So if this is the high point, what's before that? Okay, if we go all the way back here, these were highs from Friday, right? It's 2 a.m. London price from Friday. Okay, bet. If the market takes this high at 61.46, what is it going to do? Because the last time it was up here, it sold off, okay? That's all you really need to know. Your dealing range is important because it gives you where to short and long the market, okay? If you're at the high, you want to look to get short. If you're at the low, you want to look to get long. If you're at premium versus discount, that applies macro down, All right. We're in premium in the macro. We're in premium on the micro. We're in fucking premium, period. So I'm looking for ways to get short. Doesn't mean that I can't get long. It just means that I'm looking to get short because I should be, right? So if that's the case, when we wake up in the morning, you trade New York, you see London has brought the low, then longs are off the table for me, right? Not for everybody, but for me, longs are off the table. It just ain't happening, right? I don't care what New York Open does. I don't care about any of this shit. I care how can I get short. That's it. That's how you filter out the noise of, well, I kind of want to get short. I kind of want to get long. For me and the way that I trade up here at 9:30, I don't kind of want to get long. Nothing, right? I only want to get short. That's definitive. That's objective. If the market continues to rally, that's fine. I just missed it. Only way I'm trading is if the market goes short. That's my thesis up here, right? So if you want to get long, right, and you have the thesis of where you want to get long, where you want to see the market below midnight price. So first step would be identifying midnight. Midnight is at 61.44.75. Again, if we sweep midnight like we did here, we're still too fucking high. I need us to displace away from midnight price. Then I'll be looking for longs, okay? Well, the market does exactly that. We trade down into 9:30, right? We rally down to the downside and boom. A hard stop after taking what? 61.38, which was two things. First, it was London's low. We swept midnight, we swept London's low, and there's fresh liquidity down there. This is where the buyers are, right? This is where the buyers are. So we swept all of that. So of course, the objective of the market is to go back up. The second thing is, if you look at it, we came right down to PM session highs, right? And in this scenario, we say in our pre-market plan every single day, we're looking for break and retest of the PM session high. We got a break, we got a retest, we still liquidate it, right? As if we're going lower, but before we go lower, we're probably gonna push back up and retest these highs. So if you follow your pre-market plan, the only thing now left to do is look at how price is delivered inside the macro, because the macro mixed with your pre-market plan, mixed with your entry model, is gonna give you the entry that you're looking for. Shout out to Valdez because he took like a fucking killer entry today on the NASDAQ, right? And he used the same thesis, right? Break and retest. It was literally the same exact trade he took last night. It was literally repeat. He shorted back down to that level, the gap fill, right? And I'll show you on the NASDAQ exactly what I saw. I was like, oh, I see what he did. He shorted down to that level. He got out and then he immediately said, well, this is the same trade I took last night. I'm gonna look to get long here with very low risk. Essentially, if you go down to lower time frames, or you could do it on the smaller time frames, it really don't matter, right? For me, if I'm looking at the 3 minute, the 5 minute, I'm just looking at where the wicks are. We immediately bounce when we come down inside of 930, right? This thing is buffering. Gotta find my damn cursor. There we go. Okay. So we immediately displace when we come down into 930. As soon as we get that little wick, you see this little tiny little rejection box right here in that yellow box. Somewhere inside of that yellow box is money, baby. That is a gold mine right there, right? You don't like that rejection box? It's too tight for you? I bet. Go to the next one, right? And then wait for the actual macro to hit, right? That's Derby School right there calling. All right. Wait for the actual macro to hit, right? We know that inside of the macro, there's a couple things. We got the start of the macro, we got the close of the macro, but then we got the equilibrium, right? The equilibrium is, if the macro is 20 minutes, the equilibrium is the 10 minute mark, the 10 o'clock section. Right at 10 o'clock, the market dips where? Right back into the bullish rejection block, 50% of the CE, or the consequent encroachment. This is as textbook as it gets, right? Like, this is the trade of the trades, right? You don't want to enter here. You can, right? But either way it goes, wherever you enter inside of this area, your stop loss needs to be below this wick here, right? Like that 930 wick, 61.36, right? But if you want that saucy entry, that one that makes you feel like you're never in drawdown, this is how you get it. You load up inside of these key things that you're seeing at the lows on the smaller time frames, and you put your stops at the low, and you let the trade cook. Get out of the way, because if you touch it, you're just gonna fuck it up, right? Like, just get out of the way. Go make breakfast. Go make a sandwich. If it's lunchtime, go have a drink. Whatever you got to do. Get the fuck away, because you're only gonna mess it up. Every time you see this choppiness right here, you're like, oh no, I gotta sell, I gotta sell. Okay, yeah, well, you just fucked it up. And then the market's gonna trail, it's gonna roll without you. Oh, let me trail every single candle. Okay, well, we're in a high resistance, right, liquidity run, right? Which means that every time you touch this and move your stop, you're gonna accept, you're gonna put yourself in a position, where oh, this thing not working. That's horrible. It only does it. Right now, I'm good. It'll come back. Just be patient. It's gonna be the same way or not, so we'll be good. All right, so same thing down here, right? We're looking over here on the Nasdaq, right? 5 minute, we were in medium. I'm not looking for long loans in premium. I don't give a shit. I don't care. It's not gonna happen, right? The only thing that I would say about the Nasdaq that was a little different, right, which could make you give you pause, maybe give you pause of cause, is that even though we were in premium, we still were below midnight. I don't care. It needs to come lower, right? Not to mention we were already in bearish character, right? 550 had brought the high of the day, so I need us to displace lower. I need us to get that draw on liquidity. 225, that's a good draw on liquidity. What is this? These equal lows over here, 196, that's a good draw on liquidity. And for all the people that trade the chessboard, break above the highs happened inside of London, Tokyo. We got above the high, we came down and we retested once. Now we're sweeping down and retesting again. I mean, right in the 50% of this. I mean, this is sauce. Like, just, oh my God. This was easy money, guys. Easy money, right? Like candy from a baby, right? So if you look at this, the consequent encroachment is right here, right? Shout out to Valdez. He said, yeah, I got the entry off the 15 second. You don't feel comfortable with the 15 second, or you can't afford the 15 second, right? You're not trading with Top Step X and you ain't trying to pay for the premium on TradingView. That's fine. Just use the wicks as your 15 second. The reason the wicks work is because the wicks represent fast-paced structure. That structure that's fast-paced is happening on the 15 second because time is fractal, right? So if you understand that, then you could use the wicks to enter the market. Rejection blocks, easy, nice, and clean. I keep saying rejection blocks because I had myself a little YouTube short lesson on the rejection blocks, right? But in addition to that, you get the trade down inside of the macro, right? Right at 10 o'clock, we tap the rejection block, right? All of this gets tested. Easy buy opportunity down here. And then you get out right at I would have got out right at the daily resistance at 42.44. I mean, it was a nice move. It was, 44 points, but that's indicative to how slow, exactly, support and resistance. It was just this was just a reflection of how slow the market was moving in regards to our analogy that we always use when it's empty supermarket. The market was empty today. I mean, the Nasdaq, one of the fastest moving instruments and largest instruments in the space, only moved like 60 points up and down, 70 points up and down. So you got to be precise. Lucky for us, we are precise. That's what we do, right? We do precision in here. So it works out fine for us. We don't care if it's moving 60 points or 400 points. It's all the same to us, right? That being said, that is the market review, a breakdown. If you guys want any additional information or you have any suggestions for video ideas or anything like that, please don't hesitate to leave that in the comment section of this video, and or the suggestions tab in the Discord. My name is T Hobbs. This is the Market Review, and I'll catch you on the next one, man. Peace.